Hi, I'm Tyler Laundon, Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities, and I'm here with your Cabot Weekly Review. I am recording this on Friday, July 14th, and we're approaching 12 o'clock noon Eastern Time here. So obviously last week, 4th of July, kind of an odd week. We get back into gear this week. Really the bull argument kind of firmed up with the better than expected June CPI reading, which came out on Wednesday, and then the PPI reading, which came out on Thursday. Going back to the CPI, annualized 3% rate, that was the lowest in more than 2 years. Also came in below expectations, and the PPI also came in below expectations. So, pretty good news there. And then this morning, the University of Michigan's consumer sentiment reading was also well ahead of consensus, up for the second straight month, now at its best level since September of 2021. Seems like, easing inflation and a relatively stable labor market are pretty good for the consumer. So the market has been pretty happy with all of this news. It sees a higher chance now of a soft landing, more signs that we're nearing peak rates for this cycle. Of course, Fed officials are still out there. They seem to have locked in another 25 basis point hike at the July 26 meeting, which will be the week after next. Just a side note, after that, there's no meeting in August, so it goes out to September. So if you're hoping for any, concrete knowledge of what's going to happen after September, we're not going to get it. I'm sure they're going to keep us guessing. And then a second side note, maybe not the worst time to lock in some longer duration yields if you're looking for income buying treasuries or CDs or whatnot. Of course, that's not really the focus of Cabot Small Cap Confidential and Early Opportunities, but we're all in the market trying to diversify portfolios. So just being aware of what's going on with the yield curve is kind of important. We are seeing some flattening there, long duration yields coming down. Other big stuff going on, there's some rebalancing in the NASDAQ, just trying to decrease the weights of some of the mega caps, which have gotten, collectively upwards of around 50% of the index. And so that's a little bit heavy. So some news there. This morning, earnings season started for the financials and some of the airlines. We had better than expected reports from JP Morgan, Wells Fargo, Delta, Pepsi, United Health having a big day, which, that stock has been beaten down lately. So kind of nice to see that. I think, there's a lot of sort of bullish news over the last couple of weeks. The other side of the coin is that, bears are saying the market's just run a little bit too fast. Valuations are stretched. Like, don't count out rates still going higher or staying higher for longer than we expect. If we look right here up at the chart of the S&P 500, I have all my blue lines here just kind of showing levels that were significant to me as we broke through them. This week, the index moved up over this 44.48 level. So we're now at 45.18. So that's as high as we've been since, what are we here, back in mid-March. So pretty significant there. The S&P 500 now is trading with a trailing PE over 21. And I think the forward PE has got to be around 19 or so now. If we move on to S&P 600, small caps still, they're not doing all that great. Of course, we don't have the weight of the mega caps in the small cap index helping out. So it's a much more kind of diversified index across sectors with a really heavy weight of financials, which has been holding it back. The small cap banks, credit unions, those types of stocks have really been a drag on the index. But some positive progress. If we look at there's the VIX. Just stepping back for a second, if you are a little bit worried about complacency, this is a bit of a concerning chart. The VIX is just showing that there's not a lot of investor fear out there. You can go both ways with this. Obviously, it's going to come up at some point. I think there's some that would like to see a little bit of a pullback in the market, just for get a little bit of concern, a little bit of fear back in there. So the VIX is definitely something to be watching. Especially if the market continues to rip higher. I was talking about small cap financials. So here is the small cap financial ETF, the PSCF, which is not a very liquid ETF, but I keep an eye on it just because of all the distress that happened in the small cap and community banks. And as you can see here, we're kind of coming up around that level that was significant in June. in May, trying to get through that. I would definitely, like to see some more momentum here. This financials has a 16% weight in the small cap ETF, in the small cap index. That's second only to industrials, which has a 17.6% weight right now. So again, pretty significant. Like to see if some of these positive earnings reports from the big banks can help trickle in and lend some strength to small caps. I skipped quickly over another small cap ETF that I think can be of interest for those that are looking for small cap exposure but don't want to get into individual stocks. The Vanguard Small Cap Growth ETF, the VBK here, is kind of interesting. It's poked up above the 235 level right here. And it just has a kind of an interesting mix of stocks. It's just slightly different from the index ETFs like the Russell 2000, that's the RUT, or the iShares ETF. So that's the VBK from Vanguard if you're interested in that. All right, let's move on to a couple of other ETFs, and then we'll get into some individual stocks. So I had a webinar yesterday talking about artificial intelligence, and one of the things that I talked about there was people that want to have exposure to AI but don't want to get into individual stocks. Again, like we were just talking about with small caps. A couple of ETFs that may be of interest. So here we have the Global X ETF, the AIQ. And if you want exposure to NVIDIA, Meta, Tesla, Salesforce, Microsoft, Adobe, Amazon, Apple, Oracle, Netflix, Alphabet, they're all in here. Those are all the top, what did I just reel off, 10 or 12 names right there, all with about 3 to 5% weights. Check it out. It's the AIQ. Pull it up and look at the exposure. You can have that. Another option is the BOTZ, and it's a little bit more oriented toward small and mid-cap stocks. I'm just on another screen over here trying to pull up the exposure there. So if we look at the highest exposure in the BOTZ, again, it's NVIDIA with about a 12% weight, but then you get into Intuitive Surgical, Dynatrace, Cogenics, some foreign traded stocks, AutoStore Holdings, Pegasystems. You get down in there, and it's a much different mix than the AIQ. So check out the BOTZ and the AIQ if you are interested in some artificial intelligence exposure via ETFs. All right. Artificial intelligence exposure through a couple of individual stocks. So we have Datadog here, DDOG. I think we've talked about this one before, both Mike and myself. Market cap of about 35 billion. Datadog, it has a cloud monitoring application platform. I'm not going to get too deep into exactly what it does, but sort of at a high level, as companies are doing more work with data, building more systems, they're going to have to protect all of that, going to have to protect those apps, protect that data, and that's kind of where Datadog fits into the picture. There's definitely been some renewed interest in the stock after the May 4th earnings report. As you can see, after that the stock jumped above its 50-day and then its 200-day, and it's going on a nice little run here. And if we zoom out, the pandemic was definitely a bit of an aberration for a lot of growth stocks, but you can see, up around the $200 level, and Datadog is about half of that right now. So if you're thinking big picture, maybe there's a decent amount of room to run before you even get anywhere close back to those pandemic highs in the stock. Another name that's kind of interesting from AI exposure that doesn't seem overbought right now is GitLab. So again, I think Mike has talked about this. I know that I have. Market cap of about 8 billion. So they have a DevOps platform, which basically it's kind of like a platform for managing source code. So developers kind of work together, collaborate, share code, share updates, and the company has already been using AI within GitLab to help generate code, check code, those kinds of things. So, AI is certainly not new to the people at GitLab. And if we believe, if you subscribe to the idea that there's going to be a lot more code being generated and that AI can help both do that and manage it, then GitLab might be something that you would be interested in. Another name here is Shopify. Of course, we're all pretty familiar with Shopify as far as what they do with their e-commerce platform for kind of small and medium and some larger size businesses. Naturally, it's not a small cap, market cap of about 90 billion. But they spun off their fulfillment business. So they're kind of relieved of this unending capital investment program that had been a concern. So they're kind of past that. And, as we just talked about, the consumer is starting to look a little bit more confident. So online spending may be coming back a bit, and Shopify is enjoying that. They also will be using AI, they are already, just to kind of help, present things on the platform that shoppers may be interested in. It's kind of interesting if you go back to their most recent earnings call, just give that a listen to hear what they're talking about. But the stock is certainly showing some strength here, and it came up above its June highs just yesterday. It had a pretty decent move. I think it was up 5-6%, something like that. Yeah, 6.7%. So that's Shopify. Moving on to another small cap here is Shutterstock, market cap of $2 billion. So Shutterstock has they operate a marketplace for sharing content, pictures, videos, things like that. So, businesses contribute content to it, and then users, prosumers, businesses, media companies will license that content and use it. We've used it here at Cabot for images that we need for websites, reports, whatnot. But they're kind of working with AI and with OpenAI to help feed the chat, the GPT AI model. And it's kind of an interesting relationship that they're building on. They just put out a press release this week. So it's going to be kind of interesting to see how that unfolds. Shutterstock, of course, is also doing things like using AI to help users generate imagery just with AI. They put out a free tool to do that a couple of months ago, and they had a whole bunch of users on that. It's not really like a high confidence stock for me right now, but it's definitely interesting. This is back here in the beginning of the year when sort of some excitement started to build, but then it's going to take a little while for Shutterstock to kind of convince investors that some of the things that plagued them in 2021 aren't going to come back. We're talking like slower e-commerce sales overseas, and maybe a concerned small and mid-sized business market. But anyway, again, it's something to watch. I think that the upcoming earnings report, which should be out on or around August 1st, is going to be of interest. Two more small companies here that I don't think we've talked about before. Not getting into AI, but sort of branching out here now, is Comfort Systems. With the strength in industrials, I'm always watching that space, and it's been interesting lately because there's all these kind of random companies that we don't typically think of when we're looking for growth. And here we have one. So Comfort Systems is like a HVAC specialist. It's based in Texas, market cap of about 5.8 billion. And they do exactly what you would think. They're HVAC for commercial business markets. So just based on the trends here, as you can see, the stock is doing pretty well. And the growth numbers are interesting as well. It does pay a dividend. As you can see, we have the earnings reports outlined on the chart here. If you want to pause and zoom in, that might be helpful. But you can just see back here, this was last summer in July, positive reaction to earnings. We had another positive reaction to earnings in October, and then again here in February, and then again in April. So obviously the company is doing some good things. Investors are pretty excited about it. A lot of time here over the 50-day moving average line, which is this blue line. And then last but not least is HLLY. Again, kind of more like on the industrial side of things, not talking AI or high tech here necessarily. But we have HLLY has a market cap of 643 million. Came back on my radar this week because it got an upgrade from, I think it was Bank of America, so I started just digging into it a little bit. But you can see that move here was that must have been on Wednesday. So the stock was up 21%. And it's, what do they do? So they design, market, and make high performance and personalized things for the auto and truck fanatic. Engines, ignitions, brake systems, carburetors, cooling, that kind of thing. Basically aftermarket parts for vehicles. So that's HLLY. I think it's going to be an interesting one to watch as we get back into the earnings season for small and mid caps, and that report should be coming out around August 11. All right, that's it for me this week, guys. I hope you have a nice weekend, and we will be back in touch again next week. Take care.